Hey everyone, thank you so much for joining us today. My name is Derek Karpel. I am the owner and principal of Karpel Insurance Services here in Los Angeles, California. We are a full-service insurance brokerage offering solutions to both individuals and businesses throughout California. I'm here joined today by my co-host and brother, Jared Karpel, CEO of KIG Property Management. Jared.
Thank you, Jared Karpel, CEO, KIG Property Management, where we assist owners all throughout Los Angeles for the past 20 years to managing their properties, mostly residential, handling all the risks and the increased costs that are facing really in today's market.
Jared and I are both lawyers, and we love to delve into the laws and the regulations and the policies that impact our respective clients. One of the ways that we can most effectively serve our clients is to speak to the policymakers and to the individuals that impact our businesses and our clients, and which is why we're so excited today to speak to Mr. Patrick Wolff, a candidate for California Insurance Commissioner. We have an election on June 2nd, so we're very excited to have Patrick join us today to talk about his plan for California's insurance system. So Patrick, I just want to give a quick introduction about you. So you are running for California Insurance Commissioner. I know because you are really looking forward to having a system that is fair, efficient, transparent, and really puts consumers first. And I really love that about you. I love that you have this really deep understanding of the insurance market. You've got real-world business and leadership experience, which I really think makes you uniquely qualified to be the California Insurance Commissioner. You're not a politician, you're a businessman and a leader, and I think that's something that we need more of in California. You are also a chartered financial analyst, and you've helped companies like Berkshire Hathaway and other publicly traded insurers for years, which I think really gives you a broad view of the market inside and out. And I know this is not a big qualification to become insurance commissioner, but I think it's great for people to know that you are a chess grandmaster. You are a two-time US chess champion. And again, it's not a required qualification to be a California Insurance Commissioner, but I think it really is a testament to your ability to solve unique challenges and complex challenges and to really get into these intellectual conversations that I think really impact Californians throughout the state. So really excited to speak with you today. Thank you so much for joining us.
Thank you so much for having me, and thank you for that extremely nice introduction. I'll try to live up to it.
All right, Patrick, so maybe in simple terms, can you explain what the insurance commissioner actually does and why should the average Californian care?
Yes, absolutely. And again, thank you so much for having me on your show. I think conversations like this are really great and valuable. So let's talk a bit about the Department of Insurance and the insurance commissioner. And first of all, most people, I think, in California literally don't even know that the insurance commissioner role exists, let alone that they elect it. And that's really too bad because this is a very important role that really does have a big effect on people's lives and businesses. And I think we're especially seeing that now because our regulation in California, let's just say, has not been that great for a period of time. And that's really what led me to get into this race, because my motivation here is because of my background, as you were saying, I really do think that this is a way that I can serve. And I think it really makes a big difference for the state. And before I launch into answering your question about what the insurance commissioner does, I do want to emphasize that this is the very first time I've run for elected office, and I'm not going to run for any other elected office if elected insurance commissioner. This role has oftentimes been essentially a stepping stone for politicians. They're termed out of the state legislature, let's say. They don't know what to do next. They want to ultimately go to Congress or be governor or something like that. And so they look at this as a role that they can step into for 4 years or 8 years to sort of prepare themselves for something else down the line. I think that's really not the way this should be treated. This is a very, very important role. And so I'm running just to do this job, and only for that reason, not for any other reason. Let's talk about the Department of Insurance and Insurance Commissioner. Insurance is regulated at the state level. Every single state has a Department of Insurance. It really makes insurance unique as a financial product. All other financial markets and products really are regulated federally, but insurance is regulated at the state level. And so the Department of Insurance regulates insurance companies, and it regulates the way that they can operate. It really sets the rules. And different states do it differently. But here in California, we have a pretty strong regulatory system, especially for property and casualty insurance companies, for life insurance companies as well. I'll talk about health insurance in a minute. It turns out to be a little trickier there. But for property casualty in particular, that means your auto, your home, any kind of property, any kind of business insurance, any liability insurance, workers' compensation, the whole sort of suite of business and consumer insurance products are regulated by the Department of Insurance that sets the rules and really also has a big impact on how competitive the market is and what pricing is. And as we know, there's been a real big problem with availability, particularly in home insurance. All of that really is consequence of how the insurance markets are regulated. The job of the insurance commissioner, first and foremost, is to run the Department of Insurance. But you can kind of think of the insurance commissioner as a commission of one person, that ultimately decisions about how to interpret regulations, what new regulations should be written, how they should be enforced, they ultimately come to the to the insurance commissioner. Obviously, you have a large staff, like 1,400 people. Of course, there's rules and procedures. You're not stepping into this as insurance czar, right? You're an insurance commissioner. But it is a role of substantial responsibility and significance in regulation of insurance. Now, it's also true for life insurance. People are talking less about life insurance as I go out onto the campaign trail, but it does matter in terms of how the product is sold and how companies are regulated, particularly to make sure that they're safe and sound, right? So your money is safe. For health insurance, turns out to be a little trickier. Here in California, we have a department called the Department of Managed Healthcare, and that department regulates most of health insurance in California. The Department of Insurance only regulates about 5% or so. So this role, while it does have an impact on health insurance, it's really much more life insurance and especially property and casualty. And I think that's probably what we'll end up talking about today. And it's a lot on people's minds because the markets have just not been functioning here in California.
Patrick, California's insurance system seems to have a lot of challenges. Some may say it's even broken. I'd love for you to talk about, what has led to higher prices and really fewer options because so many carriers are fleeing California, and it's just having such a terrible trickle-down effect for everyone.
Yeah, absolutely. So a lot of this is regulatory failure, and I'm going to talk about that. But I think also we do need to acknowledge that particularly when it comes to homeowners insurance, we have seen these terrible, horrible, catastrophic wildfires increase in their frequency and severity. And whenever the risk goes up, the underlying cost goes up. Now, we're not helpless in the face of that. There are things we can do to mitigate those risks, reduce those risks, and I'll get into that. But in terms of what's driving up the cost, one big thing that's driving up the cost is simply that the risk of these wildfires has been going up. And again, we need to take actions to mitigate and reduce those risks. But there has also been a regulatory failure. And that regulatory failure, just as you were saying, has led to a lot of companies leaving California. And look, supply and demand, if you have only a few insurance companies operating, if you only have a few that are able to sort of navigate the regulatory hoops and barriers, of course, they're going to have more market power, which of course is backwards. What we want is lots and lots of choice and competition. We want lots of insurance companies competing for your business. And we also want really smart, strong regulation to hold those insurance companies accountable, to make sure that policy terms are transparent, coverage is what it needs to be, then when it comes time for them to pay their claims, they are paying their claims, which of course is the whole point of having insurance. And if they're not behaving themselves, that the consumer, the customer, the business customer, as well as the consumer, has that information in order to be able to hold those insurance companies accountable through your choices of which companies you work with. So smart, strong regulation can make the market work. And then choice and competition, fostering a lot of choice and competition, is ultimately, in a well-regulated market, what makes that work for the customer, so that the price is fair, that whatever the price is, we know that it's the best possible price. And then at the same time, we're going about the business of attacking the risk, to bring the risk down, to bring the cost down. And I'm sure we'll get into this a little bit more, but just very briefly, we've not done a good enough job of holding insurance companies accountable. And we have thrown up so many barriers to insurance companies actually getting their product and rate applications approved and being able to use modern risk models in California that we've chased out most of the insurance companies. That's obviously not the way it should work. And so my platform is to reverse that, to do a really much better job of holding insurance companies accountable and foster much more choice and competition and make that market work for us, the customers.
I think that's music to everyone's ears, frankly. Yeah, I think having healthy competition is what this country's about, and I think we need more of that.
Patrick, I'm an owner of a property management and real estate syndication firm. Derek obviously runs his insurance company, and we both specialize in real estate and helping landlords, homeowners, and tenants here in California navigate the real estate insurance issues. And I'd like to just discuss a few really critical ones that our clients repeatedly come to us and ask our advice on and our guidance on. The first is the California Fair Plan. The California Fair Plan was implemented as kind of a last resort. However, it's really become the only resort really for a lot of homeowners. If you could just speak a little bit about what the California Fair Plan is and really how you envision the future of it and stabilizing it so that ultimately there will be less of a reliance upon that plan, and we can bring, as you were talking about earlier, other insurance companies back into the California market to compete and lower costs for us.
Yeah, absolutely. So let me pick up right where you left that question in terms of what is the California Fair Plan. And you're absolutely right. The Fair Plan is designed to be the plan of last resort, to make sure that if for some reason you are in between coverage between one carrier and another, if for some reason you've had trouble getting coverage, that there's always this last-ditch stopgap plan available that they have to take you. Now, it absolutely was never supposed to be one of the largest carriers in the state. It was never supposed to be what the fastest growing carrier in the state, but that is what it has become. And so people understand it's not run by the state. It's mandated by the state, but it's mandated that the insurance companies in California create this privately run insurance company by nominating a board that then sets up this company to provide underwriting and servicing. And if you just think about what I've just described to you, it will not surprise you to learn that's not a recipe for a terribly well-run company. And it didn't matter when it was only covering a very small number of people and providing very bare bones coverage because, in a well-functioning market, you just use it for a little while and then you move on. But because we've had this market in failure, it's grown by leaps and bounds. I've talked to people all over the state. Nobody is happy with their experience in the Fair Plan. And on top of that, the Fair Plan's taking on risk that makes it an impediment for new insurance companies coming into the state. So how do we fix this? First and foremost, we have to fix the regular market. And so what that means is all the things I was saying a few minutes ago, making sure that we have a market that's really well regulated so that it's operating for the benefit of consumers, for customers, and making it much easier for insurance companies to come and do business in California. That insurance companies need to be able to make a reasonable profit, but never more than a reasonable profit, right? A reasonable profit to 40 million people is still a really good deal. And so that's what entices people into the state of California. And as those companies come, people have more choices. And if people have more choices, they're able to leave the Fair Plan. Now, in return for the insurance companies being able to come and do business in California, the insurance companies need to invest the resources into the Fair Plan to stand it up and make it better functioning so it has better underwriting, better servicing. We should not have to have the Fair Plan operate at this level for more than a couple of years. I think after a couple of years, we can get most of the people off of the Fair Plan onto the regular market where they get better and cheaper coverage. But in the meantime, the insurance companies need to invest those resources to make the FAIR Plan operate better so that at least it's a tolerable option for people. Now, at the same time that that's happening, right now, the way the FAIR Plan works is a little crazy, but it's true. The insurance companies are on the hook for losses above a certain amount, and then beyond that point, they can issue a surcharge onto policyholders not on the FAIR Plan. So think about that for a minute. That, like, people talk about socializing the risk, right? What we've done is we've pushed the risks onto people, not onto the FAIR Plan, which is obviously backwards. So the FAIR Plan needs to have rates that are commensurate to its risks. That needs to happen as the regular market is healing, so that it incentivizes people to get into the regular market where they can get better coverage cheaper. The FAIR Plan is not an impediment for insurance companies to come do business in California. And meanwhile, in return for coming to do business in California, the insurance companies have to invest the resources to stand the FAIR Plan up. If we do that, we can get this market back to where it needs to be and get people off the FAIR Plan. Again, I think it's just maybe about 2 or so years to get things lined up the way they should be with the right regulation.
Great. Thank you, Patrick. I want to turn our attention to wildfire mitigation discounts, if we can. So essentially, insurance companies are requiring homeowners to conduct various different types of mitigation for the risk against fire, so hardening their property. So whether it be brush fire clearance, changing or updating the roof material on their roofs, or even putting sprinkler systems on their roofs. The problem is oftentimes these discounts that are afforded to the insureds are either very unclear, they're difficult to capitalize on, and if they are obtainable, they don't really offset the cost of replacing the roof, for example. So I wonder if you can kind of speak to that and see if there's any sort of hope for those who are forced to make those adjustments in hardening their properties and being able to recoup some of that cost.
Yeah, absolutely. And I mean, this is what you're describing is a very important disconnect that needs to be fixed. The Department of Insurance has a program called Safer from Wildfires, but the problem is the Safer from Wildfires guidance often, it just doesn't align with how insurance companies are underwriting. And so people are being given guidance to take certain actions that don't line up with credit that they should be getting from the insurance company. So obviously that's broken. The Department of Insurance also mandates that the insurance company should give discounts for taking certain actions. But again, because they don't line up with the risk models of the insurance companies end up giving very, very minimal discounts that end up being nothing. And again, like, who is this helping, right? This is obviously not the way we need to do it. So the people need to be given guidance that actually aligns with insurance company underwriting. And that means that as part of drawing insurance companies into California, the Department of Insurance needs to say, look, you need to tell us what actions line up with your risk models, and then you need to provide that, right? We're mandating that you do have to provide that information, but we're not going to tell you what that information is because that's your business. What we are saying is if you want to do business in California, you have to provide that information. We'll keep it anonymous in terms of not allowing people to see what your risk models are, but you do have to tell people what actions to take so that we can provide that guidance to people, and then you need to provide meaningful discounts. And obviously the more insurance companies are operating in the state, the better that's going to work, because if you have 50 insurance companies, that's much better than if you have 3 insurance companies, right? That's just common sense. So that needs to be lined up and provided to homeowners. And then at the same time, homeowners need to be provided appropriate financial assistance to take those actions, because this is often expensive. It can be tens of thousands of dollars. That can be in the form of outright grants. It can be in the form of tax increments. It can be in the form of favorable financing. The Department of Insurance has the authority to create those programs. In fact, that authority was just created by an important law that was passed recently. And so that needs to be stood up, and it needs to be coordinated with the guidance that comes from insurance companies. So instead of imposing the Department of Insurance ideas of what people should do, they tell the insurance companies, you need to tell us what will work with you in order for you to operate in the state, and people need to get meaningful discounts, and then we'll provide additional financial assistance. And if we do that, we can line up, get the incentives lined up for people to be able to take the right actions and mitigate that risk at the home and community level, which is so important. I'd also like to briefly talk about another idea. This is a little bit more experimental, but I'd like to explore this, which is the possibility of providing group level as opposed to just individual homeowner insurance, particularly for wildfire, right? So home insurance, fire insurance is sold only at the individual level. And that makes sense for ordinary fire, right? Because ordinary fire is something that happens at your house. But wildfire, obviously, is something that affects an entire community. And I think it would be possible to create a separate wildfire insurance that's distinct from the ordinary home insurance people get, and make that available at the group level, where an entire community could purchase that, negotiate that, and then do the monitoring to make sure that people are taking the actions necessary to reduce the risk. Again, this is an idea. It's not been done so far. There's been some academic literature on this. I'd like to explore this a bit more. That's in addition to what I was describing a few minutes ago, which is basically just doing what the insurance department should be doing, but just getting it lined up so that instead of trying to mandate your own ideas, you're telling the insurance companies what they have to provide and lining up the guidance to what the insurance companies actually use for underwriting, and then providing appropriate financial assistance to that.
We do that already a little bit with employers who have group plans for health insurance, right? So we're just sort of extrapolating that idea and just placing it onto a wildfire risk for a certain designated community. So it sounds like we're already doing something like that. So I love that idea. So why not try that in this situation? Do you see that as something feasible?
Yes. I mean, it's like, from my research so far, it would actually take probably some changes to laws, but wouldn't be terribly dramatic. And we'd have to try some pilot programs to make sure it's working right. Like creating a new market, it's always a little tricky. You need to make sure that you get all the incentives lined up. But if it worked, you could see how, this is a specific risk that really attaches at the group level. And since it's a risk that attaches at the group level, it may be possible to create a product and a market that operates at the group level.
The other question I had for you that's really hitting us personally is there's an explosion of habitability lawsuits that are happening, from tenants filing lawsuits against landlords, owners of apartment buildings, for example. The problem here is that whether the lawsuit is justifiable or not, the homeowner or the owner of the property still has to pay for the defense and pay for any damages as a result of it, because their insurance company is denying the claims. There's an exclusion, a habitability exclusion in their insurance policy. And so you're left with mom and pop investors who are buying this property for their own retirement are having to either forced to sell the property in order to pay for the defense, or they're having to come up with that money on the side outside of insurance because insurance is not covering it. I'm wondering your thoughts on this situation and any sort of ideas that you have to help those of us who are kind of dealing with this exact issue today.
I've heard about this issue. I'd say a couple things generally and then something a little bit more specifically. Well, so one thing, of course, is, we don't make things easy for ourselves in California. And there's this constant tension. And that's something that operates obviously through the local government level than through the state insurance regulatory level. I think when it comes to insurance regulation, I'd say two things. One is fostering a more robust, competitive market always helps, because you do get the innovation at the company level. And we have suffered for several years in California with such a lack of availability, and therefore a lack of the creative innovation that helps make markets work. Oftentimes, these kinds of risks, a few insurance companies will figure out ways to underwrite it because they'll understand the underlying risk drivers better. But in order for that to happen, you need to have more insurance companies operating, and we've had the opposite. And because of the crisis we've had, particularly in home insurance, it's driven a lot of insurance companies out of California, and they felt that they can't do business here. So creating that opportunity for more insurance companies to come, again, always making sure we're regulating for the benefit of the customer so the insurance companies are held accountable, will only help generate opportunities for some insurance companies to look more carefully at this risk and find better ways to underwrite it. I think there's also an opportunity for a working commission to be developed at the Department of Insurance to look at specific risks where it doesn't look like the market is functioning. Now, a necessary component of that is you've got to have a lot of insurance companies operating in the state. I think you've really got to fix that choice and competition first. But I think this is exactly the sort of thing that some kind of working group at the Department of Insurance would really make a big difference to draw stakeholders in and say, look, we want to make sure this market is operating. What do we need to do? What are the particular things we need to look at, maybe from a regulatory perspective, or maybe just bringing people around the table so that you can have a product that's working so that people can at least get the protection at a reasonable price that they need. It doesn't solve the political problem, but it does at least address the regulatory and therefore the market issue.
Patrick, as I'm listening to you answer that question, I'm wondering, based upon your prior answer to the question of what to do with the wildfires, I'm wondering if even there's an opportunity for the group coverage for real estate owners of income properties as it pertains to the habitability space. So whether it be something through an apartment owners association where they're providing coverage through all the landlords of the community as it pertains to a group investing policy for habitability. Not sure if that resonates or if that's something that's plausible, but it certainly seems like something we can look into.
I think it's a very interesting idea. I think insurance is kind of endlessly fascinating because there's always opportunity. Well, I think it is anyway. And there's always opportunities to find ways of dividing and allocating risk in ways that creates better ways, more efficient ways for that risk to be spread around, for incentives to be aligned, and economic value to be created from that. So I think it's absolutely something to explore. I think what I want to think about in your specific question is the habitability lawsuit risk something that attaches more naturally to a group? And I don't know, and I'd have to think about that. The reason why I like that idea for the wildfire, again, distinct from a building level fire, right? There's this risk outside the community that's going to affect an entire community. And therefore, it seems to me, and there's incentive problems of getting members of the community to all take the right actions, because this is a thing where, because of embers and how they fly, if you have a community and 80% of them are all taking the right actions, but 20% of them are not, it might actually substantially increase the risk for everybody. But if 95 to 100% of the homes are all taking the right actions, it reduces the risk, right? And so it's a question of aligning those incentives. I don't know if that would be the case here, but it's certainly something I'd want to look at. But more broadly, I think that part of the role of the Department of Insurance should be to look at where there are these market failures and just try to understand them and try to find ways to fix them, right? It's not pandering to one group or another. It's simply trying to make the market work and then figure out, are there coordination problems or are there information problems that if you could solve would make a market and therefore make everybody better off?
So indeed, Patrick, we've talked a lot about landlord insurance and the rising costs of insurance to landlords. And ultimately, that has a trickle-down effect to tenants. And tenants are now bearing the brunt of those increased costs. I'm curious, what are your thoughts for helping tenants and working class folks, making sure that insurance works for them and to help it feel like, not a scam for them.
Look, it's always going to come back to holding insurance companies accountable. And let me give you a couple of specific policy ideas that I have there, because I want people to understand what I mean by this. One of the most important policy ideas that I have in terms of holding insurance companies accountable, there is information that's collected at the Department of Insurance. It's called Market Annual Conduct Surveys. And they're collected annually, right? And those surveys allow the Department of Insurance to really understand at a deep level how the insurance companies are behaving when it comes time to paying claims. But get this, that information is only available at the aggregate level. It's not available at the company level because the insurance industry has lobbied for years to keep that information anonymous. Okay, I disagree. I'm going to make that information public. And by the way, let me just take a step back. I know that I'm the only candidate who even knew that Market Annual Conduct Survey data existed, right? And now that I've put this information out there, all like other candidates going like, oh wow, that's a good idea. So that's important because it highlights the importance not just of being on the side of the customer, which is absolutely the point of the the insurance commissioner. You regulate the markets for the benefit of the customer. But this is a technical job. This is a job that requires expertise. This is a job that actually requires where the bodies are buried. Well, this is one of the bodies that's buried, and I'm going to bring it up. Sorry for the ghoulish metaphor there, but I'm going to put this information into the public, and not only put this information into the public, but have the Department of Insurance create a scorecard for each individual insurance company, updated annually, that you receive as you're shopping for insurance, as you're deciding whether to renew your insurance, so you can know how is the insurance company behaving. And so for for renters insurance, for example, and by the way, it may surprise people to learn, but my wife and I, we live in San Francisco. We've actually rented the same house for almost 18 years because that's the way San Francisco works. Sometimes you can get a better deal renting a house than buying a house. We're renters. I'd love for renters insurance to be held accountable the same way homeowners and all the other forms of insurance. And so again, making sure that we're holding insurance companies accountable and you can know how insurance companies have behaved so that you can hold them accountable. That rewards good actors, it punishes bad actors, it makes the market work better with robust competition. That means you know that the price you're getting is fair and the insurance companies can't nickel and dime you, or even worse, when it does come time, if you do need the payout from the insurance that you've bought. That's the kind of regulation I want to bring to insurance markets, whether it's renters or any other form of insurance.
Patrick, I love that. And I think that's one of the reasons, when we met, that was the big thing that you and I talked about, is making insurance less opaque, less mysterious, less confusing. I mean, consumers are spending a ton of money on insurance every year for something that they hardly understand. And I think that's one of the reasons why we support you so much, is this goal to, again, not to be ghoulish, but to, dig up the buried bodies, so to speak. But why not? We're paying for this. People should know what they're paying for. And so I'm really glad that you're bringing this level of transparency and clarity, or wanting to bring this level of transparency and clarity to the public. I mean, it's just absolutely necessary. So thank you.
I think you understand, and I'm sure your listeners, your audience understands, markets are very powerful, and we have to make markets work. Markets don't work by themselves, especially a business like insurance. Look, insurance is a business where you pay money to somebody so that one day in the future, if something bad happens, you get them to pay you more money. Like, if that's not a business that needs to be regulated, I don't know what needs to be, right? But the point of regulation is to harness the market, to make it work for the customers. Insurance companies need to be able to make a reasonable profit, but never more than a reasonable profit. That's, if they're making a reasonable profit, it's working for them well enough that they are being compensated for the service they're providing, but no money's being left on the table, and we know that the customer is getting the maximum benefit. And meanwhile, like you were saying, that transparency and making sure that enforcement and that all the other things that are necessary to really make the market work. That's the job of a good regulator, and that's what I'll do if I am elected next insurance commissioner.
All right, Patrick, all that makes a ton of sense. I think your ideas are great, and I'm looking forward to you implementing them. So let's talk then, what is the most important thing that Californians should be looking for in an insurance commissioner? And basically, why you? Why are you the right person for the job?
Well, thank you. And look, I think the role of the insurance commissioner, you absolutely have to be a champion for the customer, the consumer and the business customer, right? Markets are regulated for the benefit of the customer. You also have to really know how insurance operates. So I spent 4 years early in my career from 2001 to 2005, where my job at a major bank was to build an auto and home insurance brokerage business. And then after that, for the last 20 years, I've worked as a financial analyst, where I've been analyzing and investing in markets and companies, which includes insurance. So I'm coming to this with deep insurance and financial expertise. I've been very, very actively involved in as a political volunteer for the last 10 years, but I am not a politician. I've never run for elected office. I'm a lifelong Democrat, but I view myself as very much of a pragmatic Democrat. And I'm running for this role because I just believe this is the best way I can serve. I want to do this job. I'm not going to run for any other office if elected insurance commissioner. So I think I'm coming to this with a unique set of knowledge and expertise, as well as a unique motivation. I am not a politician. I'm not using this as a stepping stone. I just want to do this job. For me, the most exciting thing is the opportunity to really, really make a difference for the people of California by doing a great job here. And if elected insurance commissioner, I will be a wolf on your side.
Love it. And
Patrick Wolff,
Patrick Wolff.
ladies and gentlemen.
Yeah, no, I think, not only do we have an insurance system that is a mess in the state, but we have a political system that's a mess. We're so divided. People are so exhausted, and it is so refreshing. Again, one of the reasons why I really enjoyed meeting you and wanted to have you on today is you want to just do the job. And we don't hear that from candidates. You actually have a very specific problem that you want to solve, and that's it. And I think that, again, just so refreshing, and we're so excited to see you succeed in your candidacy.
What a crazy idea that someone should just run for the job they want to do for the purpose of doing that job. But we don't have enough of that in California, I think, and that's why I'm running for this role.
Thank you.
Love it. Yeah, thank you. Wonderful. So with that, how do Californians learn more about you? How do they support you? Obviously, we have the election on June 2nd, but I want our listeners to just not hear it straight from us. I want them to learn more about you and support you. How can they do so?
Go to my website, patrickwolff.com, WOLFF, patrickwolff.com. You can learn more about my campaign. You can contribute directly to my campaign online. I'd be very, very grateful for your support to help me reform, fix California's insurance regulation. I want to do this for you, for the people of California. If elected insurance commissioner, I'll be a wolf on your side.
For the election that is happening June 2nd, ballots are coming out in May. Look for Patrick Wolff's name on your ballot. Go to patrickwolff.com. That's WOLFF.com. Learn more about him, support his campaign. I think it's just so refreshing to finally have a candidate who actually wants to solve a problem and not just be a career long-term politician. So Patrick, I want to thank you again so much for coming. Thank you. And again, we look forward to seeing you succeed. Jared, want to thank you. To our viewers, if you have any sort of property that needs to be managed or have questions about property management here in the greater Los Angeles area, please visit KIG Property Management at KIGPM.com. If you want to continue this conversation about insurance and found this conversation engaging, as I know we did, please reach out to us at karpelinsurance.com. That's Karpel Insurance Services. We're a full-fledged California insurance brokerage supporting Californians. So again, thank you, Patrick Wolff, for coming today. This was great, and we look forward to seeing all of you again in the future.
Thank you.